Hey guys, Akil Stokes here. In today's podcast, we're going to talk about what's going on with the Bank of Japan. What is this intervention? How and if it will affect the markets. But before we get into things, I want to remind you that we have a website, www.tier1trading.com. We've got some cool stuff on that website. We've got free workshops, we've got courses, we've got trial memberships. So check it out, play around with it, and see if there's something that is valuable to your trading. So a few weeks ago, or maybe a week ago, depending on if I get this out on time, I put out a Trading Coach podcast episode called Insiders and the Power of Influence. I believe it was episode 703. And it wasn't all trading related, but in general, it talked about how we are influenced as human beings. It talked about kind of crowd psychology, herd psychology, and different things that marketers do to kind of convince us to take the actions that they want. And then we did relate that a little bit to the market and how the market is the very same way. And the cool thing about having so much experience in the market is that as I master, and I say master loosely because I don't ever believe that we master things, but as I get closer to mastery with certain things, my kind of growth mindset just takes me along different paths, and I want to understand more and more. And there's so much to understand about investing. There's so much to understand about the financial markets. There's so much to understand about technical analysis. And a couple of years ago, I took a real deep dive into volume. I remember having a conversation with Mike Bellafiore from S&B Capital, and he was curious because I think his guys were getting into FX, and we were talking about volume in Forex because it is different than in the stock market. There's no central bank in Forex, so volume isn't an overall volume. It's rather a volume per your specific data provider or broker. And he was asking me if I had any tools to use it or tools that I trusted. And at the time, I didn't. All right? I had always thought volume was worthless, pointless to look at because of those same reasons. You know, I don't want to be given partial information and make important decisions off of that. But my tide has shifted over the years. I won't get too much into that. We did speak about that in the recent Traded Today video called Volumes. You can head over to the YouTube page and look that up if you want to. But I started educating myself more on volume. I started doing a deep dive into it, and it took me along many different paths, one of which was actually learning about volume, but another one was really understanding supply and demand and basic economics and the role that your insiders, your smart money, your influencers play in the market. And at the end of the day, right, it is, like many things in life, many of us are looked at as puppets, right? The vast majority of human beings will make dumb decisions. We will simply follow whatever is the popular thing or follow whatever your friend or the internet says to follow. And because of that, it's very easy to influence and dictate our decisions. And we're looking at this recent Bank of Japan intervention, and this just screams the same type of situation. So a little bit of background, right? So the yen has been extremely weak. Basically, I'm recording this in 2022 for you guys that are listening in the future, right? 2022 has been the year of interest rate hikes, right? Almost every single central bank or bank across the world is in an interest rate hiking cycle. And it's kind of a cat and mouse game where, obviously the US is kind of the biggest cog out there, and everyone's kind of saying, hey, what are they doing that gives me permission to do this? Or what haven't they done? Oh, I can't do this. Everyone's playing this game. We're like, how aggressive are you going to be? Because if you're super aggressive, then I can be super aggressive, or I can sell this to my people. And recently, the U.S., right, the dollar has been, we've been consistently hiking rates to curb inflation. And honestly, there's no sign as of recording this that it's going to slow down. In fact, we had an interest rate decision a few days ago, and they pretty much said the same thing. We're going to keep doing it. So we've had interest rates hiking, rising here in the U.S. Other places as well. We're going to stick to the U.S. for this example. At the same time, the Bank of Japan has been like, hey, we're going to keep ours low. So it kind of goes back to basic economics. Like if you learn the very basics of trading and Forex trading specifically, And from a fundamental perspective, the first thing you'll probably read on baby pips is like, hey, it is a game of interest rate comparison, right? There's even strategies to take advantage of that, where you simply just hold a position in one currency and wait till the overnight rollover and cash out on the interest rate disparity. But it's a game of higher interest rate trumps lower interest rate if interest rate of, US is higher than interest rate of yen, then dollar should rise in comparison to yen. So you've got that big old fundamental blanket, which is pretty stinking obvious in front of us. Like, hey, we've got the dollar aggressively hiking rates. We've got the yen coming out and publicly saying we're not going to do it. We're going to stay low. Pretty much a no-brainer in where we should be investing. And we've been dealing with this for a very long time. Now, this has been weakening the yen at a massive rate. And so what they started doing is, they don't like their currency being weakened. So they're coming out and they're saying, hey, throwing some threats out there. If this keeps up, we may have to intervene, right? They said that a few months ago. Nothing happened. I think I came on a podcast or a video and said, hey, it's a threat. Don't pay it no mind. But then finally today, this morning, after the U.S. hiked rates, right before the Bank of England hiked rates as well, Swiss hiked rates too, it's been a busy week, Bank of Japan came out and said, we are going to intervene. And as you can expect, you saw massive movement in the market. Now, I haven't looked at any news because I don't really do that, right? I read headlines for stuff for today, but I don't kind of pay attention like the clickbait news. But my guess is if I were to turn on CNBC or CNN or anything like that, right, the headline would be Bank of Japan intervenes. Bank of Japan intervenes. What does this mean? And fear. And this is a good example of that influence. Because if we don't know the information, and your common trader doesn't know the information, me years ago, even as a consistently profitable trader for a decade, but not very familiar with the fundamental side of things, I would take the same approach because I'm just not familiar with it. I would come out and I would say this, okay, we have the Bank of Japan, the fish of all fishes, right? Coming out and saying that they are going to intervene. They don't want the yen to weaken. The first thing I'm thinking is, man, I should never buy the yen, right? I should never buy the yen. In fact, in my past, I've made actually good money of Bank of Japan not intervening, but coming out and saying, hey, we're going to strengthen the yen or we're going to weaken the yen. And that was, recklessly a part of my trading plan, but I capitalized off of it. But when you first hear that statement, that's the first thing you think. And that is the whole goal of this. The whole goal of this thing is to incite fear, is to make people second guess. It's to have this big bully out there saying, this big bully that is potentially full of fluff, that's, not going to hurt anyone, but just standing out there intimidating, say, don't you cross. Do not cross this path, right? And it's going to work because news outlets love a headline, right? They like to pump anything up. Retail traders buy into that. And you see initial moves in the market. Now, what I told my traders this morning is that this shouldn't really be looked at as a threat, right? Although the headlines are going to say this is the first time the Bank of Japan has intervened since 1998, that's not the full story. There have actually been, maybe you don't classify them as interventions, right? But they have done this, whether it's intervened or has just come out and has publicly sold off or bought stuff many times. I'm going to name off a few dates for you, right? We got 94 and 95, they did it. We got the big one in 1998 where they intervened. They did it again in 1999 and 2000. Did it again in 2002. Did it again in 2010, 2011, right? I was personally trading those. Those are the ones that I remember. Now, some of these had different reasons. There was the Asian financial crisis. That was the 1998 one. And then they had the 2010, not the 2010 one. The 2001, I believe, was the 9/11 one. So, right, there's different reasons for this, but it has been done multiple times before. And I'm sure there's a few other ones I'm missing. 2001 was 9/11. Forgive me for that. But one of the main differences in these other interventions, right, in air quotes, because not all of them were, is that they also had the backing of several other central banks, right? So in 1994, right, Japan and Europe helped intervene to prop up the dollar. In 1998, the US supported. 1999, I believe the Fed and the ECB supported. I may have that one wrong. Right? And same thing with 2011, right? The ECB and the Fed worked together. Now, I haven't done a massive amount of research on this yet because it only came out this morning, but I believe there are no signs of the U.S. supporting this time, right? We have come out and said we are going to be quite aggressive. So the Bank of Japan is on its own. And historically, when they have been on their own, although we've seen an initial kind of sell-off, that initial fear, what has happened is a few days later, a few weeks later, maybe a month later, things have gone completely back to normal. And that's what I think is going to happen this time, right? Our next interest rate hike, I believe, is early November. Again, I could have that wrong. I'm not great on the dates. I plug them into my head to remember them for certain reasons, but honestly, I checked like the week before. We're going to have an FOMC statement next month in October, I believe, right? It's going to be very interesting to see how opinions change once kind of this fear factor goes away and we get back to seeing that things are running exactly as they were before. Now, how does this help us as traders? Well, as traders, remember, and investors, we typically want to do the opposite of what the public is doing. So if the public is panicking and selling and they're buying yen, selling dollar yen, this is a perfect opportunity to look for buying opportunities. A perfect opportunity to get involved at a cheaper price. I can't talk much technicals here on the podcast because there's no chart to show you, but we've spoken about this in my YouTube videos for the last, quarter, last 3-4 months. And we have a very large technical projection. And although we've made pretty good moves up to that projection, there's still meat on the bone. So a retracement would give nothing more than a cheaper price. So as traders, I would challenge you to do this. Now, you always want to make your own decision. You always want to follow the rules and the guidelines of your trading plan. If you are a technical trader, you never want to hop into a trade because of fundamental analysis. But if you are someone that has a technical level or a technical signal, or I guess level and a technical signal on your chart that happen to be in the direction of this potential fundamental opinion, fundamental bias that you have, it can offer a massive opportunity to get in another long-term trade at a very cheap price. This is a method that I use in my investing, where technicals come secondary, a method similar to what I use in my investing, where my decision to get involved is from a fundamental reason. My price point where I get involved is based off technicals. This is going to be very similar, where your decision to get involved is based off technicals, but your ability to stay in, that can be helped by the fundamentals.